the big event, well, also today, Tuesday, we have speech by a permanent voter at the Fed, Lyle Brainard, today at 4 GMT. But the main event is the testimony by Fed Chair Janet Yellen tomorrow. So it begins at 2 at GMT. At exactly this time, the Fed releases a statement, the prepared statement by Janet Yellen. She will then read it out. So her reading out of the statement will not move markets, but it'll have an immediate impact once it is released, okay? We're looking there for hints about how the US economy is doing, growth, employment, and inflation. Growth is mixed, employment looks good, but inflation looks quite poor. So let's see what she focuses on and if she gives us any kind of hints about the next policy moves. Markets are now thinking that the Fed will begin reducing its balance sheet, begin undoing its money printing, will begin withdrawing money out of markets in September, and will hike rates once again in December, but nothing is certain. Let's see if expectations change. In many cases, these speeches, these testimonies are very, very balanced. The Fed is trying not to rock the boat, not to make any commitments, okay? We could see in the questions and answers by politicians, maybe they'll get Yellen to say something that will be a bit less balanced, that'll give us some hint that'll move markets. Okay, we have on Thursday producer price index and jobless claims in the US. We have the second testimony by Yellen on Thursday. She meets another group of politicians, repeats the same prepared statement. So Wednesday's testimony is a bit more important. Again, she can surprise us in the Q&A session, but the prepared statement has the largest impact. And on Friday at 12:30 GMT, we do have very significant figures. Retail sales, which is the US consumption, the US consumer has a very important role in the US economy, and CPI, consumer price index, inflation. Inflation has been falling. Let's see if it continues falling. Last time, core inflation year over year stood at 1.7%, down from the peak of 2.3. So if inflation continues falling, core inflation, excluding oil, that means that the Fed will find it harder to raise rates and it could weaken the US dollar. But if we have a stabilization or a balance, it could be positive. And last but not least, on Friday, we have also the preliminary release of US consumer sentiment by the University of Michigan. And it has the last word for the week. Dollar yen in general. The Bank of Japan is buying more bonds. This is weighing on the Japanese yen. And it's different than the Fed, which, despite all the weaknesses in inflation, is still on a path for tightening. All in all, the dollar falls and rises with Trump, and it could be impacted negatively with the recent affairs of Donald Jr. It falls and rises with the US indicators. Okay, we've seen a reaction to the non-farm payrolls, and it falls and rises with risks. When stocks and bond yields go up, and the dollar also goes up, and the other way around. Okay, let's look at the chart. We're talking about the MetaTrader 4 platform. Here is the OctaFX MT4 platform. You can see dollar yen currently at 114.36 on the rise. This is a steep upwards channel. Okay, you can see the move to the upside here. This morning we had an attempt to move above the May high of 114.35. The break is not confirmed just yet. We're still flirting with exactly this line. Okay, if we do break higher, the next levels to watch are 115.45, which was a high level back here early in the year, and then 116 and 117, both are round numbers. If we fall to the downside, we're talking about 113.45, followed by 112.60, 111.80, and 110.70. You can see all these lines as stepping stones on the way up on dollar yen. So the trend remains to the upside. Again, still optimism about the US despite weaker inflation, and the Bank of Japan is just not hawkish contrary to other central banks. Okay, let's continue to the world's most popular currency pair, euro dollar. So the euro dollar got a boost from the ECB meeting minutes. The ECB meeting minutes on Thursday showed that they are considering removing the easing bias, and this sent the euro higher. They also revealed, the minutes revealed that they didn't want to send a strong message because they didn't want to create high expectations. They didn't want the euro to rise too much, but deep inside they are optimistic about the Eurozone economies, and these revelations sent the euro higher. And what we learned from the meeting minutes was more optimistic and contradicts what we heard earlier from Benoit Coeur, hope I'm saying his name correctly, member of the Governing Council of the ECB, which said we didn't discuss tapering, he said we don't know yet what we're going to do. Markets are expecting a big announcement in September from the European Central Bank. In political news in Europe, well, it's not news, German Chancellor Angela Merkel continues enjoying a big gap in the polls, in her favor 17%. That's what markets want to see. And Europe in general looks united after the G20 summit in Hamburg on the weekend, on Friday and Saturday. We've seen a united front on climate change and on other issues, and this is also euro positive. It wasn't always this way in the Eurozone. Figure that we got this week, the Syntex investor confidence remains strong at a high level of 28.3 points. And the German industrial output came out better than expected, a rise of 1.2%. Also, not a top tier figure, but still positive data for the euro. The next big event for the euro, we have industrial output on Wednesday for the whole Eurozone after we got the German figure, and we have trade balance on Friday. And so all in all, in terms of indicators, we don't have too much on our agenda this week in Europe, but next Tuesday we have final inflation data and the German economic sentiment, the ZEW. In general, euro dollar, the ECB and the Fed are now balanced. The Fed is further away in the tightening cycle, but both banks are moving in the same direction. The direction of travel matters. The consolidation that we're seeing now, we had a small correction, now we've stabilized, not falling down, not going anywhere fast. It looks like a consolidation in a high range. I believe it could be followed by further gains, similar to what we've seen earlier this year. We'll show this on the chart. In general, growth is stronger in the Eurozone than in the US, at least in the first quarter. We'll soon, in a few weeks, get data for the second quarter. And also politics look better in the Eurozone in comparison to the US. Okay, let's look at the chart of euro dollar here on the OctaFX 74 platform. Once again, we had a move to the upside and a consolidation. You can see this is what happened beforehand, here and also here. So this is a correction, a small consolidation. We didn't fall below this 113 level. Look how 113 is a clear separator of ranges, and we're still hovering around, well, closer to the highs, around 114. So key level here, double top more or less, 114, 114.45, the high that we've seen here. Above that we have 115 and 116, so the next level of resistance is quite close. If we look to the downside, you basically don't have too much support until 113, which was the high right here. Under that we have 112.30, it becomes a bit busier. The previous lines, 111.20, 110.25 and 108.40. Okay, so we're currently in range 113 to 114.45 and looking to the upside. All right, let's talk about the pound. UK developments. We had new consumer surveys by Visa, Barclays, the British Retail Consortium. Not the official retail sales data, but all these private surveys, they all show weakness, show that Brits are buying less than last year, and that they're focusing more on essentials like food and energy, things which they can't live without, and buying less of other goods. So this is another sign of weakness in the UK economy. House prices are also falling according to the Halifax House Price Index. a drop of 1%. And the trade balance figures and industrial output, manufacturing production, all released on Friday, also came out below expectations. So all the data points we've received in recent days continue pointing to a slowdown in the UK economy. Not that long ago, we heard from the governor of the Bank of England, Mark Carney. He was optimistic. He talked about removing stimulus, hinting about raising rates. The effect that his words have on the market faded away. So we're seeing a drop in pound dollar. Next big events, we have a huge event tomorrow. The jobs report in the UK tomorrow at 8:30 GMT. Wages, like in the US, are the most important data point. We're looking for a slowdown from 2.1% year over year to 1.8%. In any case, it's below the level of inflation, so it's a fall in the standards of living. Jobless claims, which are more up to date for the month of June, they are expected to rise once again, so it's also not good news. If that's what happens, rise by around 10,000 people. But I would say, because expectations are relatively low, we had so much negative data, if we have a bit of an upside surprise, if wages don't fall that much, or if jobless claims don't rise that much, maybe we could have a bounce for the pound, okay? So much negativity already priced in. And we have another figure on Thursday. It's the Bank of England's credit conditions survey. But the big event is undoubtedly the jobs report. Pound dollar, good. We're still hoping for a soft Brexit. We heard this week that Prime Minister Theresa May is going to reach out to the opposition Labour Party in order to discuss Brexit. I'm not sure they're going to help out, but there are hopes that we'll have some kind of a softer Brexit. The bad for the UK is just economic weakness. All the indicators point to a significant slowdown and a divided Bank of England. That's the ugly part. We haven't heard too much from the BOE in the past week, but they'll make their decision later on. The big Bank of England decision is in August. That's the time when they also release their quarterly inflation report. So maybe Brexit negotiations will play a bigger role than the Bank of England in right now. Let's look at the chart. We'll see how the gains are eroding here. Pound dollar. So you can see here currently at 129. We already topped 130 once here before the elections, and then once again you can see it's a lower high. Lower high, that's a bearish sign. So we're seeing this erosion, quite a choppy trading environment at the moment. In any case, lines from top to bottom. If we break above 130.50 for any reason, then we're looking at 131.30, then 130.50, that's the cycle high. 129.75 is the next level to watch. Then 128.90, but we're basically flirting with this line right now, so it isn't that strong. Next line is 128.20, then 127, 126.30, and 125. So we've seen this slowdown, this erosion, this deterioration in the pound. I believe it can continue. It's not that big at the moment. Okay, let's continue to the Australian dollar. In Australia, we had Chinese inflation slipping to 1.5%. That wasn't such a big deal. China is Australia's #1 trading partner. The Reserve Bank of Australia, they made the rate decision last week. It was relatively dovish, or at least not hawkish as many had expected, and it still has some kind of a negative impact on the Aussie. The NAB business confidence measure, it actually went to the upside from 8 to 9 points, and Australian home loans, they slowed down a bit to 1%. All in all, mixed data in Australia. The next big events to watch out for. On Wednesday, we have consumer sentiment, a private survey by a major Australian bank, Westpac, and Thursday, Chinese trade balance. The balance of trade, on itself, it isn't that important. The bottom line is not important. Important for us, the important number is imports. More Chinese imports, more Australian exports. Okay, And next Monday we have the really big Chinese figure, GDP. Even though many people doubt it's how correct it is, how accurate, it still moves markets. And next Thursday, already looking to the future, we have the Australian jobs report. Okay, Aussie dollar. All in all, it's stabilizing after high volatility, but volatility remains high. The correction to the downside probably has ended. We did find it, Aussie did find stable ground, but the uptrend is not resuming very fast. Okay, volatility is still a bit higher, but not as it used to be. Let's look at the chart here on the OctaFX 74 platform. So, well, you had a move to the upside and then a correction, and now we're consolidating in a lower range. Contrary to the euro, which is consolidating in a high range, here we did have a downfall and we're in a slightly lower range. So let's mention the lines of support and resistance from top to bottom. 77.50 is the high level of resistance, followed by 77.10, 76.35, 75.60, 75.40, and 75.15. This is this very tight range here. We're above this range here, hugging the 76 level. If we fall even further to the downside, 74.10 is the level to watch. Okay, and now last but not least, a currency pair which has a very, very clear trend, the Canadian dollar. We had an excellent jobs report in Canada on Friday, released at the same time as the US jobs report. No less than 45,000 jobs were gained in Canada. In June, expectations stood at only 10,000. The unemployment rate dropped to 6.5%. Goes hand in hand, good news. So, we have rate decision tomorrow in Canada, and a rate hike is priced in. So, the Bank of Canada is expected to raise rates from 0.5 to 0.75%. We'll learn that at 2 GMT tomorrow. And domestic economy looks that strong that the Canadian dollar, we talked about it yesterday in a special webinar about the mood swings of the Canadian dollar. We're currently in a very positive mood. That means that strong figures have a bigger positive impact, like the jobs report, and the slide in oil prices was just ignored by the Canadian dollar. And building permits continue rising. Okay, let's look at the downtrend. Let's talk about the Bank of Canada. Well, we have housing starts today and the Bank of Canada. So a rate hike is already priced in, 90% priced in. Some analysts, I think from Goldman Sachs, have a bit of doubt. Maybe you will not get a rate hike now, maybe only in October. In that case, the Canadian dollar could fall quite a bit. So let's take here, buy the rumor, sell the fact, is also something we can see. And a no change move could hurt the Canadian dollar. Remember that the timing, 2 p.m. GMT, is exactly when Janet Yellen speaks. So it could be quite a messy time for dollar CAD. And in any case, we could have also focus. We could have a press conference. We have the press conference at 3:15 GMT. And if we do get a rate hike as it is priced in right now, the next move of the dollar CAD will depend on what we hear in this press conference. If we hear that they intend to raise rates once again in October, their next big meeting, then it could be positive for the Canadian dollar. Otherwise, perhaps the trend went a bit too far. So dollar CAD is on a clear downtrend. Domestic strength, the Bank of Canada's optimism boosts the Canadian dollar. I suspect it may have gone too far if we get just a rate hike, but a hint that it's a one-off. Then maybe we'll have a long pause and maybe even not only correction but significant pullback from current levels. You can see this very significant move here on the chart. So this is dollar CAD, a very big fall from the highs. We're already something like 900 pips off the highs of the year of 137.90. Levels from top to bottom, 135.40, 133.80, which was a strong line, then 133, very close, another strong line which was broken, and then the pair never looked back, was 131.60, We had then 130.20, just above the round number of 130, 129.45, and now we're around 129. We're looking already at even lower levels, 128.20 and 127.50. All in all, we're seeing a strong downtrend, but it may be a bit overstretched, oversold. We would need perhaps a very, very hawkish Bank of Canada raising rates and giving us hints about long tightening cycle in order to see an extension of this move. All right. Okay, so that's it for today. Thank you. As always, comments and feedback are welcome. Do join us in 2 more fundamental webinars about the Australian and New Zealand dollar. Wish everybody a safe and successful day in the markets, and that's it. See you soon. Thank you, and bye-bye.